Folks, if you're keeping any kind of an eye on funding trends right now, you already know that things are just about set to explode in 2025. The credit card industry is about to undergo some massive changes in the upcoming year, and if you're not paying attention, you could find yourself stuck with a credit card that you never wanted, or worse, unable to get approved for a new one at all. So stick around because we're going to go deep into what's on the horizon for the credit card world this year. Big change number one, the rise of FinTech credit cards. So since the dawn of time, major lending institutions have ruled the land when it comes to credit cards. Even store brand cards were mostly underwritten by the same handful of big banks. However, 2025 is all about the rise of FinTech credit cards. Platforms like Chime, Current, and others are changing the game for consumers across the board. These digital-first companies are moving fast, rolling out credit products that cater to today's needs. No fees, no hidden charges, and features built for convenience. In 2024 alone, we saw cards like the Affirm Visa credit card, blending buy now, pay later with debit card features. We also saw Klarna's credit card, integrating installment payments into traditional credit options. We also saw the Hyper credit card, offering advanced business tools to its customers. And Robinhood's Gold card, which synced directly into their investment platform. Unlike traditional banks, these fintechs don't have to navigate nearly as much red tape, which means they're able to innovate much faster. In 2025, we can expect to see even more features, better terms, and greater flexibility from FinTech credit cards. Plus, many offer pre-approvals with just a soft credit pull, so you're not looking at a big impact on your credit score, which could be great for consumers who are looking to either shop around or are building a newer credit foundation. Big change number two, the Capital One and Discover merger. Now here's something kind of alarming. Capital One and Discover are looking to officially join forces. Once this deal is finished, it would create the single largest credit card issuer in the US. With over $250 billion in outstanding loans, this merger could reshape the entire credit card landscape. But ultimately, what does this mean for you? Well, on the one hand, fewer competitors could lead to higher fees, worse reward programs, and fewer overall perks. Now, the benefits you enjoy today, cash back, travel points, zero APR deals, those could all take a big step back. But on the other hand, combining Capital One's tech-driven innovation with Discover's customer service could result in potentially better fraud protection, smarter tools, and brand new features. But don't get too excited just yet. Our friends at the Federal Trade Commission are scrutinizing this deal for potential anti-competitive concerns. If regulators block the merger, we could see this entire thing fall apart right before us. Either way, this is definitely something that you're going to want to keep an eye on, especially if you have existing accounts with either of those lenders. Now, big change number three, Goldman Sachs and the Apple Card. Now, there has been a huge shakeup in the Apple Card world. Recently, it was announced that Goldman Sachs is straight up selling its entire Apple Card portfolio. Why? Because Goldman Sachs claims that they've lost over $1 billion in consumer credit, with the Apple Card playing a big role in those losses. So what's the problem? Well, the Apple Card's no fees, everyone's welcome approach didn't exactly pan out. It attracted a majority of users with lower credit scores, leading to higher delinquency rates. Goldman Sachs also faced a $90 million fine for billing errors and issues with interest-free financing. So what's next? Well, Chase Bank has stepped in and is reportedly in talks to take over the Apple Card. And if this happens, then you may end up seeing some changes like stricter approval standards, because Chase is already known for its premium cards, which often come with a stricter credit requirement and annual fees. You could also have possible new fees for Apple Cards. Chase could introduce fees to make the Apple Card more profitable for the major lender. You could also see billing cycle changes, because Chase may want to change the way billing cycles work, which could then affect your card's simplicity. So if you're an Apple Card holder, this is something you absolutely need to stay on top of in order to be ahead of any kind of major changes. And speaking of changes, our final big change to credit this year, tighter credit standards across the board. With Donald Trump coming back to the White House, one thing coming in that he suggested, or threatened, I guess, is to clamp down on credit card interest rates across the board. But in answer to that, several major banks have already stated that they plan to then tighten up standards for getting approved for new credit if that happens. In fact, thanks to delinquencies being sky high in 2024, the rejection rate for credit card applications jumped to nearly 20%. That's 1 in 5 people who applied for new credit getting turned down flat. So, if this domino effect takes place, how is this going to affect you? Well, you could be seeing lower credit limits. Even if you get approved, your credit limit could be slashed down from the highest that it could be, especially if you don't have a long credit history. You might see higher credit score requirements. Remember when a 650 FICO score was enough to get like a decent rewards card? Well, not anymore. Now, a score of 700 to 720 is often required just to get an initial approval. And stricter income verification. Lenders are asking for more proof of income than ever before. So if you're a side gig worker or freelancer, this could be a tough hurdle to overcome. Now, all of this is to say that it's never been more important to study up on credit offers before applying to make sure that you're actually qualifying and not just wasting an inquiry on your credit. And that's just the tip of the iceberg, folks. 2025 is shaping up to be an absolute game changer for credit cards of all kinds. And if you want to stay ahead of the curve and avoid getting stuck with outdated, expensive options, it's crucial to keep an eye on these shifts. Whether you're eyeing those innovative FinTech cards, or you're worried about Capital One and Discover, or you're bracing for tighter credit standards, the decisions that you make now can have a major impact on your financial future. So don't wait. Do your own research, stay informed, and make sure that you're ready to take advantage of whatever comes next. Thank you so much for watching. If you found this video helpful, hit that like and subscribe button for more updates on the ever-changing credit world. On behalf of everybody here, I'm Zach Ritchie. Thank you so much for watching, and I'll see you in the next one.